I think there's three things you need to do here. One, income. Income rules the world. Income pays your bills. Income can pay your mortgage. Income does everything. Without income, you got nothing. Income takes hard work. It's hard to get up the ladder, earn more income. Secondly, is you need to have optionality. You need to have things that can pay off. A startup or a hobby business on the side can give you optionality because you can build a business, and a business has intrinsic value, plus it can increase your income. That will never happen if you work for a corporation. Yes, you can have a great career and do fine, but you'll never have that extra upside that you and I have had by building businesses. So that is another thing, is focus on your income, work hard, look for other opportunities that can leverage that income and opportunity set that you've got for you. And then thirdly is, if I've got this income, look for investment opportunities that can change my life. And that doesn't mean being a degenerate gambler. It's like, simply put, if there is a thesis, for example, in cryptocurrency that you and I share, that this is a long-term network adoption of this incredible technology that is exponential in nature and highly volatile, you should be looking at the moments of extreme weakness, the blood on the streets moment, to be buying more, not on leverage, but just putting your money into it. So if you'd have bought a house after the 2008 crisis, you'd have done very well. If you'd have bought it at the peak, you'll have done less well, right? So timing matters. My framework is, this is a long-term trend, right? We've got at least another decade in this, at least, probably 2 or 3 decades. But this part of it is going to continue to do very well. Sure, Bitcoin over time, as it gets more users, more adopted, it won't go up as much each cycle, but there'll be plenty of others and plenty of opportunities. So what we should be doing is using this, thinking of the money you've put in as your retirement money and writing it off. And then just adding, if you've got money in a bear market. Now, the problem is most of us don't in a recession. But a friend of mine taught me very early on, he said, Raoul, there's a key thing I've learned is, he who has cash in a recession is king. So that's that combination of income and opportunity. You've got income, you've got some cash, and now everything's on fire sale prices. You're the king. Look at your loss of wealth from peak. That's stupid. That's the American dream, fixating on something that doesn't exist. Think, okay, fine. I'm still in, I'm probably still up. Don't think, oh, my net worth's down 50%, this is the end of the world. No, that's not how it works. How it works is, you need to be in it to win it. And you can't be in it to win it if you've got leverage or if you're out of the market. And so if you say to me, well, that's difficult for people, sure, then put less in. It's as simple as that. You get to the point where you can sleep at night, then you've got the right size bet. And once you have made money and it's compounded, then don't look at it.
So that you can enjoy it when you get it.
Yeah, and write off the investments I've got in crypto. And then I observe the sentiment, I observe the sirens, I hear the song, but they don't affect me. Well, they obviously do affect you, but you try not to let it affect you as much. You distance yourself from price action because your theory is that it's going to go from here to a lot further over time. That key word is over time. And we've all of us have said, and we know it does this a lot on the way. So then if you know that it's a known, why the hell when it happens do people forget? So let's look at other opportunities. So maybe not everybody likes crypto. Another thing that is patently obvious is technology is not going away. Now, it's not easy to pick the right technology stocks, much like it's difficult to pick the right NFTs or tokens unless you really know what you're doing or you know that particular company or that project. But if the thesis is that technology is going to continue to have this ridiculous adoption, whether it's AI, EV, whether it's robotics, whether it's genetic sciences, all of these things that are around us, space travel, well then, if it's being sold in a fire sale because everybody's panicking. Well, surely that makes sense because technology has outperformed the market for the last 40 years. So you always want to be buying technology. So if you're thinking of your 401k, you're in your 30s, you look at your 401k and you've still got your income, because that's the most important thing of everything. You've got your income. You should be going, okay, I should be buying technology stocks and I should be buying crypto because these are long-term mega trends. These are the things you need to think about in this: is where are we in the volatility and is this going to survive? Those are the two questions. And if the long-term trend is there, then you should be buying into all of this. The real estate developer guys, the kind of wealthy guys who were in real estate as their primary thing, a lot of them had sold quite a lot. Then the hedge fund guys were very concerned about recession, but were looking, and so they were buying, let's call it cash, bonds, cash, anything to kind of just not be involved in risky assets like stocks and stuff. But they were looking for the opportunity for the other side, which is what is that opportunity? And that opportunity was technology, crypto, and commodities. These guys wanted both commodities and technology, because they know this one's probably kind of a good 5 or 10 year cycle, and the technology cycle is limitless right now. So that's, I guess, where most people were thinking. But everyone was very nervous over this next 3-month period about what happens to the economy and what could happen to markets.
So what signals are they looking for?
They're now starting to look to deploy stuff into interesting opportunities where things are really cheap, which is the thing I said before. When the market throws out the baby with the bathwater, that's when you start finding the things you really like. In crypto world, things like Solana, great project, down 85%. There's a whole bunch of these super speculative assets that obviously speculative, risky, but not super risky. They're all down 80, 85, 87%. Okay, that becomes interesting.
What are you doing?
I have bought into big sell-offs and I'm kind of cleaning up my portfolio, sorting it out, getting ready to do that, to try and add as much as I can.
In crypto specifically or
into
elsewhere?
Crypto specifically, but I've also been buying technology stocks for the same reasons. And I don't really care about, I've owned bonds as a trade, because bonds, once the economy weakens, bonds tend to go up in price. So people, you can trade things like the TLT and they go up when yields fall. So you can make some profits from doing that. But generally speaking, I've been looking at these two mega themes because I really believe in them. And, meanwhile, as what we talked about, I'm increasing my optionality by building businesses and trying to make sure I maintain income.